Kevin Coldiron, who's a lecturer in the financial engineering program at UC Berkeley's Haas School of Business. He joins me now from Oakland. Kevin, good to have you on the show. All right, so you have 2 or 3 collapses in the U.S. and then an emergency takeover of Credit Suisse and now Deutsche Bank. My question is this primarily about low confidence in the banking sector, or are there structural issues?
Well, I think it's structural issues causing confidence problems, right? And the structural issues go back to what you just said, that central banks have been raising interest rates to fight inflation. And that is causing some of the long-term assets, particularly bonds that banks have bought, to lose value. And people are aware of that. And they're aware that those bonds have lost value, and therefore they're starting to get concerned about the, I don't know if solvency is the right word, but certainly some liquidity. If there's a loss of confidence, people pull money out. Banks are going to have to sell some of those bonds that have lost value, and that's a problem.
Seems that there's a catch-22 here. If inflation remains the main risk, and clearly the Fed thinks that way. We've seen what it's done last week. Then this is obviously going to continue to cause problems, whether it's for banks or for borrowers.
You nailed it, right? It's an absolute catch-22. The central banks are they're raising interest rates to fight inflation, but as they do that, they create risks of deflation. They create risks. They've created potential for a banking crisis. They create going to be basically you'll see a reduction in bank lending, and then the concern about banking crisis means they have to provide liquidity, which in turn raises the long-term risk of inflation. So they're caught in kind of a vice, and it's very tricky for them. My sense is that the immediate risk is not inflation, it's deflation. But longer term, the reaction to the deflationary crisis, to the banking concerns, raise the risk that inflation is going to be higher longer term.
So what do you think the Fed should do?
Well, they didn't ask me, but I don't think they should have raised interest rates at this time. I think that was they want to show that they're being tough on inflation. But the fact that we've had a couple banks collapse, there's a big cloud over regional banks, means there's going to be a lot less bank lending going on. So already the banking crisis has led to a tightening of credit conditions, which is what you try to achieve when you raise interest rates. So to me, they've kind of backed into what they were trying to achieve, which is a tightening of conditions. I don't think they should have raised interest rates this time. And I think what you're seeing in the market with longer term interest rates falling is a belief that they're not going to be able to maintain short-term rates at this level for very long.
Kevin, there's a lot of talk out there in terms of comparisons to the 2008 global crisis. I know fundamentally there's some big differences. That was the housing crisis, a housing problem, and now we're seeing problems in bank. Do you see at least a common denominator in terms of the potential for a widespread global contagion?
Well, the similarities are that in 2008 there was concerns about the value of mortgages and mortgage securities, basically mortgage bonds that banks held. So there was a concern about bank solvency. Now there's not really a concern about the bank solvency in the sense that a lot of the concern is about government bonds, and government bonds aren't going to be defaulted on. It's more a question of if people take money out of banks and they have to sell those bonds, they have to realize a loss. So it's not the same level of risk in the banking system, but at the core, they're both about confidence in banks. And the way we got out of the 2008-2009 crisis was the government basically injecting equity in banks and saying we're standing behind it. And I suspect that we may need some type of similar action by central banks or governments this time around. I mean, I hope there's not global contagion, but I think there's the potential for it. But I don't think the situation is as serious as it was in 2008.
Okay.
And hope hope that doesn't come back to bite me, but that's just my assessment.
All right, gosh. Kevin Coldiron, pleasure in talking to you. Thank you very much.